Okay, as a continuation of the earlier video, you can see that we have a break below the ascending trend line, and price is approaching the red line, the red horizontal line, which is the midpoint between the buy limit and the sell limit. Okay, price is approaching the midpoint between the buy limit and the sell limit. So if price gets to the midpoint, okay, I will place a sell trade. All right, if I get to the midpoint, I'll place a sell trade. So what I'm going to do is just to wait patiently and let price come to my trade entry level, which is around 952,641.43. I do not want a like currently I have a breakout, but I do not want a fake out. A fake out occurs when you have a breakout but price reverses almost immediately, leaving your trade hanging without you having profit, now creating a drawdown on your account. So you saw a breakout and you dived, placed your trade, hoping that you'll be in profit, but upon placement of your trade, price reverses immediately, leaving a wick showing that price is going to go the other way around, the other way. So that's going to give you a fake out. It's a fake breakout. Okay, so I do not want to fall into that situation. So I'll patiently wait for price to get to around the red line. If price gets to around the red line, I also monitor on the axe line and bid line before entering my trade. Okay, now I want to enter my trade, so I'll look at what's happening on the axe line and the bid line. You can see price, the axe line and bid line are both going up, so that price is already leaving my red line, so which may end up forming a wick to show that price is going back up. I can see on the screen, I've already seen rejection going back up. So if I had hurriedly placed the sell trade, I'll be in drawdown, I'll be in loss for now. But I'm going to wait patiently for price to go below the red line before I enter my trade. Okay, I think I'm getting there. Okay, it's gotten to the red line, so I'll take a trade of 0.001 lot size sell. I'm going to place a sell trade. Okay, I can see instantly in profit. Okay, price has dropped below the red line, which is the midpoint between the buy limit and the sell limit. So I'm going to try to put take profit or have around 2,000 points, so that price will close, my trade will close in profit before price get down to the buy limit below. I don't want my trade to be running and at the same time price will trigger my buy limit. So I'm going to place my take profit at a safe distance above the buy limit point, so that I can only have one trade running, which I can successfully manage, other than having two running trades where I'll need to have two hedge trades to cover the two running trades. The current running sell trade is in profit. As you can see, it's in profit. So I'm looking at the take profit. I have my entry to be 950,170, and the take profit is 950,211. So 211. So I have to adjust. I need to adjust the take profit to match exactly 2,000 points. But for now, the trade is doing well. I'm in profit, but I can sense some bullish strength, like the bulls are trying to come in. I'm already seeing the formation of a small green bar, which is showing that some bulls are around that level trying to push price back to the red line, which is the midpoint between my buy limits and my sell limits. Don't forget, my buy limit is at 948,000 and my sell limit is at 958,000. The buy limit is serving as my support area. The sell limit is serving as my resistance area. You can see the bulls trying to push, the buyers are trying to push price up Okay, now I have a drawdown. I have a drawdown already. So what I'm doing now is to adjust to exactly 2,000 points. I'm adjusting my take profit for the running sell trade to be exactly 2,000 points, which is 950,170.11. If you look at the running sell trade, it's 95 to 170.11. So the exactly 2,000 points will be 950,170.11. The bulls are still trying to push price up, but the current uh, bearish bar, okay, is already an indication that we have a strong rejection by the bulls, by the bears rather. The sellers were able to push price down below the ascending trend line, okay, and price also closed below my mid line, which is the red horizontal line. So that gives me a strong conviction that we'll grab these 2,000 points. But let's see what happens. The bulls are trying to push price back to where it was coming from, which is back above the red horizontal line. You can see bull strength. So if I continue to monitor the bull strength, I may need to place my uh, pending order, buy stop, pending hedge order. Of course, if I'm going to place the hedge pending order, I'm going to place it 4,000 points above the current sell trade entry. But the sellers are still trying to push price down. Let me see. Let's see if it's going to trigger my take profit, and I'm going to bank 2,000 points from this trade. Don't forget, I still have my buy limit below, and I have my sell limit above. So if price gets to my buy limit below, I expect price to go up by 3,000 points. And if price refuses to go up by 3,000 points and price continues to slide, I will quickly place a hedge trade 4,000 points below the buy limit order. Of course, by that time, the buy limit will have been turned to a buy trade. And on the other hand, if price goes up as it is, if price continues to go up, I'll quickly place a buy stop to protect this current running trade. And if the buy stop, if they take profit, which is going to be 2,500 points, if the take profit is going to overlap the sell limit above, I may need to delete that sell limit order so that I don't have two running trades at the same time to prevent confusion. You can see the bulls are trying to push price up. So I'm already anticipating that, quickly providing the cover for the running sell trade, which is a buy stop for exactly 4,000 points or around 4,000 points above the current sell trade. So I have like an insurance, like a cover, which is 0.003, which is 3 times the 0.001 at around 4,000 points above the running sell trade. So that is to protect the current running sell trade if price starts to go against it. Of course, if price goes against it, I have a drawdown. Okay, and if it now gets to my buy stop, to trigger my buy stop will turn to a buy order. Okay, but my buy stop is already 3 times the lot size of my running sell trade. So I expect to break even if price continues to go up, so that I can close the two trades in a good manner for me to minimize loss on my account. Of course, if currently I have 2,000 points on my sell trade, and the sell trade is the only trade that is running for now, 2,000 points on the sell trade. But if the buy stop order gets triggered, that is my hedge trade gets triggered, I will have to quickly adjust the take profit of my sell trade to 2,500 points, so that I have equal number of points take profits. I have equal number of take profit points on both trades, on the sell trade and on the buy trade. That is if the buy stop gets triggered. and the buy stop turns to a buy trade. So I have 2,000 points, 2,500 points for my take profit for the buy trade, and I'll have 2,500 points for my take profit of the sell trade. Now, of course, I'll have two running trades, and I will need another hedge trade. So I'll now bring up a sell pending order, sell stop pending order as my next hedge trade, which is going to be 0.008 lot size. The first trade is always 0.001, which is the running trade. The first hedge trade will be 0.003, okay, and the second hedge trade will be 0.008. Okay, if you have a bigger account like $300, for instance, you can place a third hedge trade, which is 0.016 lot size. All right, so for now my trade is in a drawdown, it's having a drawdown, and price is currently approaching the buy stop order. If price triggers the buy stop order, it turns to a buy trade. You can see I've already mapped out the take profit and the stop loss for the buy stop order. I have a sell limit in place, I have a buy limit in place. So one thing I have to be very conscious of is the take profit of my buy stop order is not overlapping the sell limit above. If that is the case, then I'll have to delete that sell limit as price approaches the take profit of my buy stop order. So in as much as the two trades are between the sell limit and the buy limit, I'm in order in line with this strategy. But if the two trades, either the sell trade or the buy trade or buy stop or sell stop, if they are lapping or overlapping with the sell limit or the buy limit, I may have to delete the sell limit or buy limit. If the trade closes, if the running trade closes, I may reintroduce the sell limit or the buy limit, as the case may be. For now, we can see a reversal. After the small bullish candle below, you can see a longer bullish candle forming. Okay, we are on the 5 minutes time frame. I'm trying to scalp profits on volatility 75 index, taking 2,000 points, 2,500 points, 1,000 points, 1,700 points, as the case may be, and having a guide. Okay, the guide is the sell limit and the buy limit. The sell limit in this case is at our resistance zone. Our resistance zone is at 8,000 level. In this case, we have 958,000 as our resistance zone. Then the support, we have a buy limit at the support, which is our 8,000 level below, which is 948,000. The next support will be 938,000. Then following the next support again will be 928,000 before we now have 918,000. But for now we have, okay, price about to trigger the buy stop order. Price about to trigger a buy stop order. We're in a drawdown. We're having a drawdown. Price going to trigger a buy stop order. Don't forget, buy stop order is 3 times the running sell trade. Okay, like I was saying earlier, our resistance, the first resistance is at the 8,000 level, which is 958,000. The next one will be 968,000. The next resistance will be 978,000. So for every resistance you place your sell limits, for every support you place your buy limit. Now our buy stop is triggered. I discovered that the take profit of the buy stop will overlap the sell limit. So I've deleted the sell limit. So I have two running trades. So I need to introduce another hedge trade of 0.008 lot size. So what I'm doing currently is to adjust the lot size of my sell trade. Initially the lot size was 2,000 points. Now I'm going to adjust it to 2,500 points. The reason why I'm adjusting it to 2,500 points is in case price starts to range further by going down, I may need to introduce another edge trade, which is 0.008. So I will now use corresponding take profit of the 0.001 on the 0.008. Okay, so price is still going up. If it triggers, if we get closer to the take profit of the buy or the running buy trade, then we will have a break even where the drawdown becomes zero, where there is no profit or loss, and we may possibly come up with a little profit due to the calculation and placement of orders. Okay, but for now, price is directly on the buy trade. Okay, and we have a drawdown of minus 4.88. Okay, drawdown on the buy side, drawdown on the sell side. Don't forget, this strategy is not for small accounts. To use this strategy, you need at least $300. So that in case price continue, in case you enter your trades in a wrong or a ranging position, so that at least by the time you have the third cycle of hedge trade, you'll be out in profit or at break even for the worst case scenario. Okay, so you do not need small account like $20 to use this strategy. You need at least around $300 to use this strategy. Okay, the sell stop 0.008 has just been introduced. It's been introduced around some point like 80 or 50 points above the sell trade point. Okay, so I'm going to place take profit of 2,500 points, equivalent to the take profit of the 0.001 trade, and I'm going to edit the stop loss of the 0.008 to be equivalent to the stop loss of the 0.001. So I have two running trades. I have a buy trade, okay, buy trade of 0.003, and I have a sell trade of 0.001, and I have a pending order, a sell stop of 0.008 in case price continues to go down. But for now, price is going up. Okay, price is going up. I anticipated price to go down in line with the reaction around my trend line. But since price wants to go up, so we have like a fake out. It went down, telling me you have a breakout to the lower side. But now a sharp turn. And now we have a fake out. Okay, we have like a morning star, okay, pattern where price continues to go up. Now, as price goes up to get to a level where we have a break even, where my drawdown will be reduced to zero, and it will also get to a level where I'll be in a small profit in line with this strategy. Okay, so let's continue to monitor as price continue to go up towards my towards the take profit of my buy trade. Okay, price going up. I have a running sell trade 0.001, and I have a running buy trade 0.003, which is the edge trade for my sell trade. My sell trade, the initial original trade is 0.001. It turned out to be a wrong trade, so I'm trying to cover position with a hedge trade 0.003, so that my account will come back to break even, where I do not really have loss, but I close with small tiny profits, as the case may be. Okay, I deleted the sell limit above at the 958,000 level because the take profit of my buy trade is lapping with the sell limits. So I don't want to have two trades. I don't want to carry two running trades where I have a scattered trade setup. So I want to have a neat trade setup, which is the running trade and the hedge trades. I do not want to have two running trades and just one edge trade. whereby account still goes into loss at the end of the day. And to have just one edge trade, I just want to have one edge trade at a particular time that I can monitor and then cushion with another edge trade. Not two running trades where I'll need to have two edge trades of different points that may bring confusion and at the end of the day blow the account. So in line with the nature of price fluctuates, ranges, try to deceive the buyers, giving confidence to the sellers, and at the same time trying to deceive the sellers, giving confidence to the buyers. But this strategy involves hedging. Okay, you hedge to just to have a cover, just to have a protection of your trade, of your account, so that in case your trade goes the other way around in line with your expectation, you'll be rest assured that you close with a small profit, not even a loss, but with a small profit if you follow the direction as mentioned in this video and in the subsequent two videos, and in the previous two videos rather, which is you enter your sell trade, then you place buy stop 4,000 points above your sell trade, or you enter your buy trade, then you place sell stop 4,000 points below your sell trade, below your buy trade, and then the take profit for both buy and sell trades will be 2,500 points. In case price goes the other way, you'll be able to break even or go with small profit. For now, I placed a sell trade, and then price reversed and went up to trigger my buy stop order. Now I have a sell trade running 0.001. I also have a buy trade running 0.003. Now the spacing between the sell trade and the buy trade is 4,000 points, but the take profit is 2,500 points, not 4,000 points, but 2,500 points, so that I can, because I have tripled the lot size, so that I can quickly break even and close all trades before I'll make another decision to enter another trade. This strategy gives opportunity for you to quickly close a losing trade with small profit and then wait to enter a better and profitable trade that may not trigger your pending order or your edge trade. But for now, you can see price is ranging upwards. Price is currently ranging upwards, so I expect price to go up to the take profit of the buy stop at 2,500 points above. I expect price to go up at that, but if it comes down, it's going to come down to my second edge trade, which is 0.008, which is almost exactly on the running sell trade, which is 0.001. But for now, you can see that the bulls are showing some level of strength. I pushing price upwards. So if price gets to my take profit for the buy stop or the buy trade, it will be better for this exercise. But if price comes down, that means to show that the range continues, then it will trigger my sell stop. Okay, don't forget this strategy is not for small accounts. You do not use a $10 account to practice this strategy or to trade this strategy. The account may blow easily. Okay, the very okay account balance is $300, but for this exercise I'm using a $145 or $146 or $147 account to do this exercise. I've been using this strategy for a long time, and that's why I can confidently use that amount to trade with this strategy. But I encourage you to get at least minimum of $300 to be able to trade this strategy. Don't forget your limits, your sell limits, buy limits. There are points where price gets to and price reverses. But your buy stop, sell stops are points where price gets to, and price continues in the direction it's going. So as price is now, if it continue downwards, you may have sell stop. So if it triggers your sell stop, your sell stop becomes a sell order, and you expect price to continue to go down, then you'll be in profit. But as price is right now, if it continues to go up, you may have your buy stop. If price gets to the buy stop, it will trigger it, and your buy stop will turn to a buy order. Then you expect price to continue upward, then you'll be in profit. But as it is now, you may have a sell limit above price. So sell limit, you expect price to reverse when it triggers your sell limit to come to start to sell. You remember you placed your sell limit above price. So you expect price to trigger your sell limit above and then start to come down. Then for buy limits, you place a buy limit below price. You expect price to fall towards your buy limit, to slide towards your buy limit and triggers it and then start to rise. So the difference between buy limits and buy stop is that once price touch buy limit, you expect price to reverse so that you be in profit. But for buy stop, once price touches or triggers buy stop, you expect price to continue to buy so that you be in profit. And the other way around for sell limit, when price gets to a sell limit, you expect price to start to sell, then you be in profit. Then for sell stop, when price touches your sell stop, you expect price to continue to sell for you to be in profit. Now for this particular screen or this particular video, as we are at this point, the bears and the bulls are struggling to have a dominance on price. Right now price is showing some bullish strength. It's starting to go up towards my buy order, towards the take profit of my buy order. If it gets to the take profit of my buy order, I'll have break even, then I'll close all the 2 trades in small profit. If price continues to go down, it will get to my second edge trade, which is 0.008. Okay, and the range may continue. Okay, but let's continue to monitor. Like I said, sell limit is a reversal limit, is a reversal pending order. I set sell limit as support. I've taken for this exercise, for this strategy, I've taken my support to be at the 8,000 levels. So price is currently at 954,600 or 954,384. So I expect my support to be at the 8,000, the next 8,000 level below, which is 948,000. As price is at 955,600, I expect my resistance to be at the next resistance, which is 958,000 level. If you look at the take profit of the running buy trade, the take profit is around the 958,000 level. Okay, so I do not have a sell limit around that level, so I've deleted the sell limits because I do not want to have 2 running trades. So price is going up now, and I expect it to get to the take profit of my running buy trade so that I can close the 2 trades. Okay, the current candle just closed. We can see a long wick below showing that the buyers are stepping in. Okay, and you can see the reversal. Instead of going down, price now going up. It's going up. Expect it to touch. Okay, you can see the bull strength. The buyers are coming in with force. Okay, the pattern is already bullish, more like a bullish continuation pattern, with two more like a